If you struggle holding your trades long and you maybe exit way too early in a trade, I'm going to show you exactly how I manage a trade and what kind of tactics I use throughout a trade to be able to maximize my profits from a whole big move of the day. So here, we're going to focus on this very strong downtrend. In a very strong downtrend like this, typically you may end up exiting way too early than you want to, based on, maybe you want to take whatever you see, it's very strong, you think that price is about to reverse, but then it pulls back and then it continues lower. The first thing I want to say is that based on the previous levels from previous days, support resistance, those are going to be one of the key reasons to really watch for how price moves. I have previous day high marked, you can see this green line, then I have pre-market high, which is right there. This is the highest point of the aftermarket hours as well as pre-market. And then I have the lowest point of after hours and pre-market as well. So both high and low basically. And then the previous day low. Those are all the previous day levels. And then from there, they kind of go all the way across to see how price moves. Another thing is where the support and resistance areas are. These are going to tell you exactly where the strong buyers are or where the strong sellers are. If you want to know exactly how I draw these levels, I'll link in the description exactly how I mark this area. But I wanted to focus mainly on a trade, so a very big move. How do you manage it throughout? Because we don't always know price is going to move this strong. Sometimes it's only a short distance, sometimes it just goes choppy. How would you manage it throughout the movement? That is going to determine how much profit you're going to make depending on what type of trade you take or how strong the market is. So over here, say that you did the whole analysis and you see some kind of confirmation here at open and a rejection of the pre-market area. I'm not going to go into detail why you would take this trade, but I'm just going to give an example that maybe you took a rejection off a certain level and then you entered for puts because it went with the overall picture. Now, based on the levels, we could see it rejected pre-market high. Say that you entered once price consolidated and you traded an opening range breakout. So the opening range moves sideways, then you just take the breakout of the base. So here consolidation broke below. So say that you entered right there as price broke below this consolidation and you entered for puts. Then stop loss, typically I would put my stop loss at the high because that is the highest of the day. If price breaks up, that would just show a false breakout. So now that we know exactly where we likely entered right there, now how do we know exactly how to manage this trade, or how do we hold it longer than we can to maximize the full day of movement? I am going to go through and cover everything up till that point here. So what I have on is this 9 EMA, you can see here, 9 exponential moving average. That's going to give me a good guide as to how strong the trend is. Whether price is above a 9 EMA or whether price is below, that's going to give you another confirmation of how strong the direction of the trend is going. So revealing each candlestick, this is the 2-minute chart, how I execute. So I would usually just trail my stop loss on that 2-minute chart. So then we reveal each candlestick and I'm clicking this button down here. Here, how I would move my stop loss is as price moves, we're going to mark the highest point, which is going to be the stop loss originally. So I'm going to mark that with a solid line. And then as it pushes past this 9 EMA, I'm going to now move my stop loss to the 9 EMA. That is also the consolidation low right there. So you can kind of see wherever the 9 EMA is, sometimes it has a lot of confirmation along with other levels from where price is moving. So right here, I would move my stop loss right there because if price is consolidating and breaks out, it should not break back inside consolidation if it is a true breakout downward. That is the first sign. So right there, once I move my stop loss, it's now a very tight stop. So if I get stopped out, it's probably either going to be break even or it's going to be a very tiny stop right there because my entry was right on the break of this low. So that's going to be my stop loss originally to the 9 EMA. And then let's start revealing the candlesticks. Just because this is a strong push doesn't mean you should exit. If you exit way too early like this, you're basically just doing a very fast scalp. If that's the strategy you want to go with, then so be it. But if you're looking for much bigger moves and a huge percentage of the day, you don't want to exit just because it's very strong. You want to hold the trade until there's a reason to exit. How I manage my trade is that I only exit if there's a reason to exit. And how I do that is I just trail my stop loss. If I get stopped out, that is what I will profit from. I do not have a set target because we can't always expect price to hit a certain level, and most of the time we don't always know how strong that movement is going to be that day. Sometimes it's really strong and it just tanks. Sometimes it may stop right here. So we want to just trail our stop loss. As we see a strong push, what you see in a very strong movement or a good trend of the day is that price will break these strong levels and hold below them. If price is breaking these levels right here that we charted, then we can see that it has strong movement as it's breaking and pushing through all these areas that are potential support areas. Anything that you draw on the chart is a potential bounce area. I've seen that throughout all the screen time that I've had, price likes to react off all these levels. Sometimes it may not react and it pushes right through because the trend is so strong, but sometimes it will react and sometimes it may even reverse there, and then you want to exit because that is a signal that price is no longer going to continue in your direction. So as price pushes down, I'm going to now move my stop loss to the 9. In certain cases, I wouldn't use the 9 EMA, and I'll show you exactly when I'll change my stop loss. So as price pushes down, we can see now it looks like a weak candlestick. So unlike this very strong movement down, we have a tiny little body, a longer wick above. This does show that it's bearish. However, it doesn't show as strong a movement because the body isn't strong. So we don't have a follow through just yet. I'm going to move my stop loss to this high right there because that area is the high of this very big candle. If price is truly going downward, we should not have a green candle and a reversal right after a very strong push. If it is truly pushing down after a very strong candle like this, we should see continued movement. If it's green and it pushes higher, that is likely maybe a reaction off this level, and it may even reverse if this level turns out to be very strong. So here, I'm still having my stop loss right there, and we kind of just move that stop loss with each candlestick. So we want to evaluate how each candlestick looks, the strength of it, how big is the body, how long is the wick above it, is it below it, is it breaking through a level like this, is it holding below, closing, is it below the 9 EMA, where is it in relation to the high of day. Those are all different factors you want to look at when you're trailing your stop loss to maximize your profits. Then the next candle looks like it's pushing down, looks also very indecisive. We have another weak candlestick. So a tiny body, a wick there, doesn't really tell us too much on the strength, but again, I'm going to move my stop loss right down here. So the 9 EMA still. Then the next candle looks like it's indecisive now. So now it's looking like it's consolidating, basically a sideways movement. Both are indecisive candles. Price has really not gone anywhere for the past 6 minutes. It's just been staying below this area, and it's in between two strong levels here. So we want to take note that it is in an area where it could reverse because we have two strong levels, or it could just be very indecisive here and move sideways. So I would just move my stop loss right here to the 9 EMA and see how this pans out. Then here, looks like it's still sideways. So with each reveal of each candlestick and then a close, it's gonna reveal how weak the area is. For 8 total minutes, we see that price is sideways. So now we know that price is in consolidation. If price is in consolidation, just like we see here, we wanna see if price can break below consolidation. So I would just see if price breaks below this area, that would show a strong downward trend to continue the movement. Or if we break above consolidation, we do not want that. That would show that this whole area is a weak area. If it breaks upward, that is not in the direction that we want to trade in. So I would likely exit above this consolidation area. But again, I would also not move my stop loss just yet because in some consolidation areas, we do have wicks. So here you can see consolidation and it wicked at this whole area. So you don't want to exit so early. Just give it some breathing room to see how the wicks turn out. So I'm going to leave my stop loss right there and see how price moves from here. Then moving this sideways, still sideways movement, nothing too much, nothing too crazy. Price pushes, it breaks this area, it wicks at it, but we don't have a close below it. So it doesn't really tell us too much yet. We don't want to assume anything, but I would now move my stop loss right there because now this high of consolidation has been established and it's just a little higher than this key level right there. So really good stop loss, give it some breathing room for a consolidation. Let's see the next candle. still hasn't broken. So that's why you don't want to exit just yet, because it could still be in consolidation. Just really be patient in this time. This is a long period, 2, 4, 6, 8, 10, 12, 14 minutes. So 14 minutes of just sideways movement. This is when you want to be very patient. When you're actually in a trade this long and it's sideways, you may end up getting impatient. Sometimes you may exit because you don't want to be in the trade, or maybe you may lose hope and see that if it's weak, it may reverse. I want to exit because price is at the maximum point here, I should exit. Don't do that just yet. Unless you want to exit partial of your position, you could do that, you could scale out, but price has not really given us a reason to exit just yet. As price moves sideways, sideways, and what you want to see here is that price is still below this 9 EMA. So as we take trades and as we evaluate price, we want to take note of where price is in relation to the 9 EMA. This is also going to give us another confirmation if the trend is truly bearish or bullish. Since price is below this 9 EMA, it gives us confirmation that it's still a bearish trend. However, it looks kind of weak here, so any kind of push higher, say a very strong green candle, I would exit my position because of that. It should not break and close strong above this whole area. Going down, nothing going on. Now we have a break. We have a strong breakout of this level, consolidation low area, pre-market low. This whole candle is below the 9. It now closes below the level, a very strong push. The candlestick itself, the body is much larger. This close is towards the bottom of the candlestick. That is telling you that price is strong. We have a direct push away from consolidation. This is confirmation that the trend may be continuing down some more. So then after this candle, we see a very strong push. Now I can move my stop loss. And now I'm going to move my stop loss right here at this consolidation low, because like I said before, if price breaks consolidation, it should not break back inside consolidation. So as it breaks out, I move my stop loss to wherever that breakout point is. This is the consolidation low. It's close to this previous low area from pre-market low. The 9 EMA is also very close by. So many different confluences. Just look at all the different confluences telling you that price is still very strong, and you want to hold that trade until it shows weakness. Then revealing the next candlestick, we have another push. So as it starts pushing, I'm going to move my stop loss all the way to the high of each candle, as well as seeing how close it is to the 9 EMA. This just allows me to see how strong price can go. If price opens and it pushes higher above a very strong bearish candle, it basically shows that that could be maybe an engulfing candlestick. It could just be shown that price is rejecting off a tiny level here, and it could reverse. So another good type of stop loss is to trail it above certain candlesticks. That is going to show you a very good area to have a tighter stop. We go down, again, you're really just trailing each movement down. So this can start going lower and lower and lower like that. So you can see that it never breaks the high of the previous red candle. That is a very good sign. However, as price pushes lower, you could see just by looking at the candlesticks, these bodies are starting to get weaker. They're a little smaller as we go down. If we look here, price is indecisive now. We have a smaller body as compared to the previous candles. We have larger wicks, both above and below. It just looks very indecisive at this point. Now we're seeing that we're having more wicks below. So this is something you should definitely pay attention to. Could we even bounce here and go higher? Just because we have a support here doesn't mean price is going to go all the way down here. It could end up rejecting a level that maybe we didn't see in the past. So we want to evaluate price as it goes. I would not assume anything about price, whether it is going to get to certain levels or if it's going to even reverse here. It could even push lower. As price pushes lower, take note of how the 9 EMA is. Another way to know if you should hold a trade is if price suddenly reverses right here and has a huge green candle up here. That could be the first sign of a reversal, because here could just show a lot of weakness here. A big green candle could show a reversal right here. So you just want to watch out for each candlestick as it goes. And as it's moving, you do have quite some time. A 2-minute candle seems like a very tiny time frame, but when you're really trading, it kind of moves very slow, especially if it's just continuing a trend. unless sudden news comes out or some kind of speech is happening, you won't see a sudden drop or a sudden push higher. You will see that gradually you're able to manage your trade. So then the next candlestick looks like price is continuing lower. However, you want to watch for how price closes. So just because it moves like that earlier, you see a very strong red candle, doesn't mean it's going to close like that. It was very strong at first, but here we start seeing a lot of weakness. This is our first green candle in a while. It's having a very long wick below, again showing weakness in this area. Could we be reversing? Because this is the first sign that it could reverse in this whole area. What I would watch for is, because price is very indecisive here, this candle, and this candle are all indecisive. You don't want to exit too early just yet, because this could honestly be a consolidation. Whenever you see weak candlesticks like this, previously indecisive candlesticks, sometimes it could be part of a consolidation. So just because it looks like this doesn't mean you want to exit just yet, because it could consolidate and then end up pushing lower. So I would not move my stop loss just yet. Here, indecisive as well. It looks like it may be curling higher, but again, this is still consolidation for me. So I want to see how price reacts. We could even have a little pullback and then a push lower. So you don't want to stop out too early, because in a very strong downtrend, this is the daily trend. If price has already been established to go down, we could even have a little bit of a pullback before it pushes down. So just trail your stop, give it some breathing room in a very strong downtrend, because likely if it's a very strong trend, it will have pullbacks. Here, again, looks very indecisive, but then it's red. So we don't want to exit just yet. This could be the sign of it pushing lower. So just keep that stop loss there. And we can also see that the 9 EMA is really approaching our stop loss. So even better, because we can now use the 9 EMA as a potential stop loss. So down here, it's still below the 9 EMA, a very good sign of a bearish trend. So really, from this original entry, price is not even broken and closed above. We have a little wick at it, but we don't have a close above it. So that confirms a very strong bearish trend. So then looking back down here, we reveal the next candlestick, and you look at that, a very strong red candle. So based on all this movement, it is much larger in comparison to these bodies as well as even these bodies. This is honestly the strongest candle we see from the whole day. We have the biggest body. So you want to be patient when you see consolidation happening, because when it chooses direction, it could really give you a lot of strength to the downside. And then here, the 9 EMA is right there. I would leave the stop loss right there, because this is consolidation high. So just like I managed it here, I move my stop loss and I really leave it at consolidation high. As it breaks out of consolidation, then I would move my stop loss. So it breaks lower, looks like it's now wicking in this area again. Maybe we are getting weak in this area, but we do see that price did not push all the way up. After this very strong push down, it just looks indecisive. It didn't have a huge reversal higher, so I would still stay in the trade right there. Then here, looks like it's now pushing lower. I would then now move my stop loss maybe around this area, just the consolidation midpoint, because the low of consolidation isn't really a strong established level. This whole area, price should not break above this 9 EMA. So then here, price pushes lower. We're now at support. So when price is at support, you want to be careful, because these are very strong areas where price could even reverse right away. So while you're watching this 2-minute candle, you want to see how it moves as price is moving. So every single second, is it pushing lower? Are there sudden spikes in movement? Is price just wicking right away, or do we just have continued push down? This is a very good sign of price pushing lower still, because the lowest point of the candle is right there. There's no wick. That means price isn't pushing higher. It's opening and closing all the way at the base of the candle, showing a lot of strength downward. So that's a very good sign. Now I'm going to move my stop loss right here now. This is sort of that low of consolidation that I was unsure of, but since it has already broken away, I'm now able to move my stop loss, and the 9 EMA is there as well. So these two are very good close levels. I always like to see that these two levels are very close. That just gives me added confidence to stay in that trade. And revealing the next candlestick, again, a very strong push. Now it looks like a very strong push past and through this support level. that is also a good sign, because if it directly pushes below like this could be another sign that we could even push even lower. So this shows that the strength is so strong that we don't even have a reaction just yet. It goes directly through. Every candlestick is very solid, huge area, not a very strong wick above or below. So that shows that we could be continuing lower and lower. Now again, here, that is the first sign where it's indecisive. So I'm still gonna move my stop loss all the way probably to this area here where the 9 is. And I just wanna watch whether price is going to push higher. Sometimes if it's weak still here and we have movement just sideways, I will just look at it. But if we have a sudden push higher, I will want to see whether I want to exit my position maybe a little earlier. Right here, we do see a bullish harami. So this body is inside this previous body. This is a bullish sign, but we don't always know it's going to go bullish. This is just the first sign. We don't have confirmation that it's actually reversing just yet. So I want to see, is price going to have a next very strong bullish candle, or are we still going to stay below this area and push lower? The next candlestick looks like, all right, so it was very bearish at first, but then we had a close. This is a very long wick. We could see in comparison to all the other candlesticks, we don't have such a strong wick below. Maybe we have these areas, but this is the strongest area where we see the largest wick available. This is very bullish. This is a huge bullish sign that we could be reversing. So right here, I'm gonna move my stop loss just to this area. It should not break the midpoint of this big red candle. Because this is such a strong red candle, in any kind of movement, it should continue. It should not break above this midpoint here. That would show that it's curling higher, and this strong push may be the end of all the selling. So even if there is a very strong push down, it doesn't always mean it's gonna continue. If we see the consecutive candles after that showing a bullish sign, we don't wanna always hold our trade, because this is a whole strong support. This could have just been a fake out breakout to the downside, and then whoever started entering here on a trade thinking that price is gonna break this support area would just get stopped out. So here, let's see the next candle. This is gonna determine if we wanna stop out. So if it pushes, I would exit my position. It looks very bearish, and then we have a very strong bullish push. This is a very strong bullish push. It went all the way through this whole midpoint, and then it just had a lot of strength. So even though it looked bearish at first, this looks like a very strong push. I'm gonna exit my position because it hit my stop loss right there. It's at a very strong support level, and then also it's now breaking through above this red candle. So this is where I would exit this entire downtrend. It may just be a pullback and it may continue. However, in a lot of my experience, when the price is very vertical like that, after all the selling, likely there's no more sellers. Once there's all the selling being done, the buyers will start stepping in, and then it will reverse from here. So right there would be my exit for this trade. And then let's see how it turned out. And then maybe exits out here. So all the way from this movement, after that exit, that was honestly the best point you could have exited at. If you would have held for maybe a potential pullback, it looks like it never ever got to this point again. So this was honestly the best exit that could be. You don't always know if that area is going to be the best exit, because we don't know how strong that push is. Sometimes out of reflexes, it may push in a few seconds and you're not able to exit just yet. So in any trade, I would always recommend having market orders. So when price really pushes, you can manually exit right away and be out of your position. If you're in a limit order, it may take a few seconds, it may be delayed. And by that time, if you don't have it executed, you could be exiting right up here after that huge push higher. So always market orders. I do that for all my executions, for entries, for exits. And then through this whole management, this is how you would hold your trade longer. Using the 9 EMA, consolidation, seeing whether price breaks certain levels, and then seeing how strong the candles are. Do we have a big body? Do we have a long wick? How does it look? How does it push below certain very strong support resistance? And then based on the candlestick patterns, sudden movements like this, you want to exit. So that is exactly how I hold my trades for the maximum profit I can have for the whole day, and then just maximizing every day, big wins, tight stop losses.